Here is the trading history, the financial results, and the profits earned with this day trading strategy. As you can see, I started with $63 in the trading account to set up this strategy and prove to you that it's not just luck, that you can really go from a small trading account to one where you end up with $5,000 in capital, which is definitely more comfortable for trading and aiming for days with higher profits. Obviously, not all the positions are shown on the screen here. This is just a screenshot. You can still see quite a few positions: $400, $300, $300, $350, $350, $340, and so on. Here, you have the commissions that my broker charged me for all the positions I took over these 2 days of trading. And you can see the entry prices. So, I entered at the zone that was acting as resistance over the past few days at $119,000. And you can see that I took my profits at around $123,000, which is roughly a 400 pip increase. So, you need patience, you have to manage your emotions, and you have to let your buys run as long as the market doesn't turn downward. We're going to look at all of this together in more detail: the strategy, the price action. I'm going to reveal everything to you: the signals I used, the price zones, how I think, how I buy, and especially why I buy. Stay focused right until the end of this video. You'll find very little content on YouTube where someone shares a complete strategy with you like this, and totally for free. Let me remind you that I have absolutely nothing to sell on this YouTube channel. I'm only sharing my trades with you, the way I analyze stock charts, and simply my passion for finance. The very first step when I open my charts is to switch to higher time frames to see if the market I'm looking at has a clear trend. The performance was achieved on Bitcoin, and we're on the daily time frame. We'll even go up here to the weekly, and as you can see very clearly, Bitcoin is very bullish. On the weekly, it's very bullish. On the daily, it's also very bullish, as you can see. We have a low price here at $75,000. We have the recent highs here at $124,000. So it's a huge bullish trend with a little pause here in the middle. So why do I do this? Why do I look at the higher time frames even if I decide to enter a day trade, for example on the 15-minute chart, with signals on the 15 or 30-minute chart? Because actually, I want to follow the main underlying trend, meaning I don't want to end up selling Bitcoin when it's been very bullish for weeks or months. What I will do instead is try to buy again at attractive prices, waiting for corrections or for breakouts of zones like this one here, which will allow more liquidity to be released and trigger a little bull run. So it's very important to mix your time frames, to use several time frames, both large and small. That way, you get the overall feel of the market. You have a lot more information and you can make much more relevant decisions. Here, as you can see, we're on the 4-hour chart, and on the 4-hour, it gets really interesting because we can get into the details of the strategy. And first, what's interesting on the 4-hour chart is the price zone, as you can see here, which has been blocking the market since the last upward move. The market simply couldn't break through this price zone. We can also see that the market set up a bullish trend line here, and that it also established a bearish trend line acting as an upward resistance. As you can see, the market was consistently pushed down every time it got close to the trend line, until the moment when we finally had the trend line breakout. And that's when things started to get really interesting for me. That's when I started to trigger my buy orders. We're still looking at Bitcoin on the 1-hour chart. You still have the bearish trend line here and the bullish trend line here, which together simply form a flag, a very well-known chart pattern. The statistics show that the market usually continues in the direction of the previous trend when it breaks out of this flag, so upwards. What's really interesting on the 1-hour chart is that you can clearly see the moment when the market also breaks through the resistance zone that was holding back the price. As you know, I told you earlier, ever since the end of the first upward move here. And that's a very important signal because first, we have the break of the trend line here, and then we have the break of the resistance. You can see that the price settles above the resistance. So this price zone now becomes a support. And you can see here, we really have the signal candle at around $119,000, which is where I started buying. We're going to break through this little working zone here. A small resistance is formed. The market breaks through it with this bullish candle. And then we have a rise of 300, 400 points in a straight line in exactly 3 hours. It happened super quickly. There was volatility, there was a lot of movement, a certain bullish momentum. And so, it was a relatively easy trade to hold because the move happened quickly. You always have to be patient in your trades, stick to your plans, it's important. And sometimes, the moves will happen quickly and sometimes, it'll be very slow. Right now, you can see that the market is putting in a pretty sharp correction and it's simply retesting the trend line here, which used to act as resistance and is now acting as support. We dropped a bit below the price zone, but that's not a problem. We might get back above it very quickly. In any case, you can see that in real time here, we have a buying opportunity. You have to look at how impulsive the candles are, the size of the candles. Are there really still buyers? But in any case, we have a price zone here in real time, which is very interesting. The market really came up to make its high and then worked this price zone again. So if the market holds this trend line as support, there's a good chance it will bounce back. On the other hand, if we break this trend line, we'll probably settle into a market that will slowly decline, at least until it comes back to retest this price zone around $110,000, $111,000. Chart analysis is relatively simple, you just have to follow the trends and the movements. And as long as the market makes bullish accelerations, then stabilizes, ranges, forms flags, and keeps making higher lows and higher highs, well, it remains bullish. As long as the market doesn't break through its support significantly, it stays very bullish. And you should always trust the dominant trend, which right now is upward. As long as, on a higher time frame, for example, on the daily chart here, we don't come back down into this whole price area, this huge price zone that has become a support and was previously a resistance, as you can see here, which blocked the price for a very, very long time. Well, as long as the market doesn't fall back below this price zone, it's very bullish, my friends. No matter what happens, even if we correct all the way down here and then bounce back up, it's still very bullish. The market is always making moves in a way that also tricks investors. And as you know, in cryptocurrency, there's a lot of volatility and very violent moves. But what I want you to remember is the importance of following your trend and drawing your price zones properly. After that, it's just a matter of intensity in the candlesticks. It's just a question of volatility, candle size, chart patterns, and above all, not cluttering yourself with too many technical indicators. As you can see, there are literally no technical indicators on my chart. I have an RSI at the bottom that I haven't even activated, which I sometimes use as confirmation for additional signals, but mainly on your chart. You have all the information you need thanks to the patterns your candlesticks will form. The price gives you all the information, the rest is just psychology. Finally, it's important to talk about risk management. As you can see, I went from $60 to $5,000 in just 48 hours. So obviously, this strategy was very aggressive and I took a lot of risks. But that was intentional. Why? Because this isn't my main trading account. It's a different trading account where I allow myself to go after big profits with a small amount of money. It's kind of a way to let out all the emotional impulses that are hard to manage as a human being in, well, this job as a trader. It's not easy, psychologically, to hold onto your buy positions for a long time. You want to take your profits quickly. When you're losing, you want to double down in the direction of your buy or sell to make up for it, to limit your losses. These are all psychological biases that are hard to control at first, but over time, you'll see that with experience, with failures, with successes, you'll manage to get a better handle on all of this and end up with better results. The basic risk management I recommend is to stick with a 2-to-1 risk-reward ratio. So if you're risking $50 on your stop loss, you want to make sure you're earning at least $100 on your first take profit. TP stands for target profit. So that's the minimum. Here, as you can see, I made 300, 400 points in profit, MTP. So my risk-reward ratio was more like 4-to-1. Why? Because of the stop loss, since I had a stop loss at 100 points and the first TP at 400 points. You won't always have the chance to get such good risk-reward ratios, but the minimum is 2 to 1. And then, once you're in a position, you have to be patient. Quite simply, you need to be patient. You have to trust the trading plan you've put in place. Have fun on your end spotting trends on your charts, drawing your price zones, sketching out your chart patterns, and trying to enter a position when there's a strong support, when there's a breakout of resistance, or when you have a combination of positive signals in line with your technical analysis. I'll see you very, very soon on the YouTube channel to share many more profitable strategies with you. See you soon.